Okay, traders, let's get into trading this Ichimoku system. We're going to go over one of the signals real quick today. We have 10 minutes, so we got to get into it quickly. Um, First thing I want to tell you, when you're trading, I trade the hourly, so what I do is I go on to the daily and I check the bias of the market. The way you check the bias of the market is like I told you. If price is above the Kumo, then that's considered bullish. Anything up above the Kumo is bullish territory. Anything below the Kumo is bearish territory, and anything inside the Kumo is considered consolidation. Okay, that's going to be with your signals and everything. You'll see as I explain that. Okay, the one we're going to get in today is called your TK cross, which is your tenkan and your kijun. Your tenkan, which is this green line, and your kijun, which is this blue line. If you don't know these lines and the Kumo and the lines, you need to go back on the video that I made earlier talking about the components of the Ichimoku. Okay, now here's the system. Here's the signal. When you get across of these two lines, it's just like a moving average crossover, but these are a little bit different in moving averages, that they're taking the average price and so. It's different, a little bit different. Okay, but let's look at this cross right here. This is a bearish cross because when your green line, which is your tenkan, crosses your kijun from above going below, that's going to be bearish. When it crosses it from below going up above, that's going to be bullish. Okay, now you have to determine if the signal is strong, weak, or normal. To see if a signal is strong, you look at where it happened. This signal happened in bullish territory, but it's a bearish signal. They don't mix. That's weak. If it would have happened down here, that would have been strong because it's a bullish signal. It's a bearish signal happening in bearish territory. Up above the Kumo, bullish territory. Below the Kumo, bearish territory. In the middle, a normal signal. So if this happens up here, this is a weak signal. Okay, if it happens inside this Kumo, it's a normal signal. If it happens below here, it's a weak signal, a strong signal, because it's bearish and we're going bearish. Okay, so I hope you understand what I'm saying there. We could go over that again, but let's look at this. You have that cross, okay, and then here's another one. Now it crossed over again and it went up for a bullish cross. Okay, that's a bullish cross happening inside the Kumo. That's a normal signal, not weak, not strong. Now look at this weak signal, and you took this weak signal. It probably happened around right here, and you got in right here. Not a real good trade. You put your stop up here. You have to put your stop at least above your kijun. Don't put it right on the kijun. Put it a little above it, okay? Because that means a lot of times price hits the kijun, wicks it over a little bit. So you want to have your price a little bit above it. Okay, that's one area where you put your stop loss. You would have came and got in on probably this candle here, and you could have made a little if you didn't. You could have got stopped out if you didn't get out in time. You would have probably seen this happening, but you probably wouldn't have felt real comfortable about the trade anyway, looking at how it was going. And also another thing to look at is this kijun. When you see it flatlining like this, that means the market is dead. That's flatline, no heartbeat. So that means basically we're consolidating, not much going on right here. Okay, um, you got your cross. It's in bullish territory, but it's a bearish cross. It's weak. Okay, you got this cross. It's inside the cloud. It's a normal signal. Now this cross here would have been a good one because look what happened. It moved up. You put your stop. Here's where it crossed right here on this candle. So you've got in here. Your stop has to be at least right here. Okay, at least under the kijun, or else underneath the cloud. If you're an aggressive trader, it'll be right here. If you're a little conservative, well, if you're conservative, you'll probably put it there. But look, now another thing, you can put it at price and look for support and resistance levels with the price, with price action. And here's a low right here. You could put it right there. That could be your stop. But it almost lines up with this Kumo right here. So I put it right down here. Okay. Another thing is when you get into a trade, you want to look at where your cheek out span is. Your cheek out span tells you, it's like a filter for you when you make your trading decision. Okay, it's 26 periods back. So back from your price right now. We got in right here. Let's go 26 candles back and see where the Chikou span was. The Chikou span was above price. When you go take a when you take a bullish sign, you want the Chikou span to be above price. When Chikou span is above price, that's bullish. When Chikou span is below price, that's bearish. When Chikou span is within this price realm, it's considered consolidation. Okay, so when you take a trade, you look at your filter, which is your Chikou span. You're taking a bullish trade. You want Chikou span to be bullish too, above price. Now another thing that stops Chikou span from moving, if you were going short here, if this was a short sign and your Chikou span was right here, even though it's below price, you have to consider it busting through this Kumo, and sometimes that turns the price around a little bit. You have to be sure that the Chikou span is going to get through this Kumo. This Kumo is support and resistance, and the thicker that Kumo is, then the harder it is for that Chikou span or price to bust through it. Okay. Now another thing is that when you see this Chikou span have free selling like in this big open area, then a lot of times that's going to be a good trade for you, because there's nothing interfering with this Chikou span, and it's going to run, and it's going to take price with it. Price is running with it. Okay, Chikou span and price are running together, so that's a good thing to look at. Some people don't use this Chikou span, but it's very important. Okay, when you see this kijun, your kijun flatlining like that, like I said, its market is dead, nothing's going on. So it's another sign to look for also, because when this is happening, eventually price has to do something. Price is either going to start going low or start going high. So this is a non-trending market here, then it starts trending. So when you see this kijun sen making marks like this, doing this flatlining, be prepared to get into a trade eventually, because the market's going to start trending either way. Okay, so you look for signs like that. Like I said, that's your filter. Now your stop loss would always be below at least your kijun, or below your Kumo. You could put it below your tenkan. Those are the three areas for stop loss. Okay. Now take profit. We took this long trade. We took this long trade here. Take profit is usually when you have a reverse of what you just had. So you have a crossover right here. Now you have to be, sometimes you have to use your own common sense and feel like you want to get out. Sometimes you can see certain things telling you that the market's slowing down, that the trend's slowing down. You see price dropped here, started consolidating a little bit in this area, moved up. It looked strong here, but then you had a strong bearish candle here. Usually when price crosses this kijun, when it crosses it and closes below it, it's usually a sign of trend reversal, because on this way up it never even touched that. Okay, but once it hit there and crossed, it did reverse. It changed the trend right there. Okay, so that's a sign for you to look for. So that's how you take your profit, usually on the crossover of that or on the break of that kijun sen. Okay, those are your two profit areas that you look to take your profit. Now you could take your trades, and if you're going to do a strong trade, say your trade was strong, your signal was strong, you could put in like 3 lots. If your signal's weak, maybe you put in 1 lot, and if your signal is normal, maybe you put in 2. On a strong sign, say you put in 3 lots, and you take profit on certain levels. Okay, you have to decide levels you want to take profit on. Now I still use Fibonacci's and everything. I use I use support and resistance. I use trend lines. You don't have to not use those things with your Ichimoku system, but your Ichimoku system just gives you a way to look at something really quick and tell what the sentiment of the market is. Okay, but I'm running out of time here, so that's what I wanted to get into. But yeah, you can see these crosses, and you can see how well they did. This is a weak cross, but it still did very well. And here you have another cross. This was a weak cross because this is a bullish cross in bearish territory, and it did okay. It did pretty good. Okay, so you have to decide and filter, and use a lot of common sense. So hopefully I'm helping somebody. We'll go over this and get into it more. If you have any questions, just let me know. All right, thanks. God bless.